Welcome back, traders. Welcome back to the channel. This is today is a Sunday, and I'm going to be issuing out another video, a new video. It's been 2 days since we last made a video, but I've been so busy and fixed. But finally, I'm back with another video, and today we are going to be going through our setups on the 4-hour time frame. And the setups I'm going to be doing okay guys, don't worry about that. So I'm going to be showing you one of the setups that is in the strategies we trade in supply and demand, and this is a drop, a base, and then a rally. No, let me put it clear. Excuse me. A drop, a base, a rally. That is one of the setups that we're going to be looking at today. So what happens? Price drops and makes a base or forms a base and then rallies to the up, breaking the previous structure, which is this one here. If it creates this break of structure, what we are expecting is breaking the previous structure here. So what we are expecting is price to come back to this area if there is a valid demand zone, and then it will buy to the upside. So we're expecting price to come back to this area and then buy to the previous high as our take profit. So it is going to be as simple as that, and our entry mode is going to be like this. Put your entries here, your stop losses below, buy entries, and then target the previous high. So the risk reward is going to be according to the previous high. However, this mode is going to give you clear entries, clear stops, and then clear target. So depending on which kind of trader are you, this is going to be your mode of entry. So I'll just clear out everything. I just clear out everything. We go to the charts and I show you how this can work out, or how to identify these setups. I told you just need to be a supply and demand trader, and the rest is going to be easy for you. So this is gold, and this is the 4-hour time frame. I told you you're going to be identifying these setups only on the 4-hour time frame, and this means you're going to be a swing trader. It doesn't mean that you cannot identify them on the lower time frames. It's just that today we are doing the 4-hour time frame. Previously we have been doing many time frames, including the daily, including 1 hour. We have done 30 minutes, we have done 45 minutes, even 15 minutes before. So depending on which kind of trader you are, this is going to be helping you. So what happens is you don't have to make it difficult. It has to be as simple as it looks. You come to the charts. When you come to the charts, you look out for the setups. Identify the setups. After identifying the setup, then identify the market direction. Simple. There are only 2 things you need to do. You don't need to do the top-down analysis. However, if you do it, it is going to give you extra confirmation and confidence if you're swing trader, especially if you're swing trader. You can do the top-down analysis. It will give you extra confirmation and the confidence to enter the trades. However, if you're not a swing trader, then you don't need to do the top-down analysis. You just need to identify the setup and then identify the market direction. So today we are only going to do drop, base, rally. However, we also have the opposite of that, which is rally, base, drop. But today we are only doing drop, base, rally, and my next video is going to be the opposite of that. Simple, clear, and straight to the point. You don't need to know a lot of things, candlestick patterns, chart patterns. Okay, if you knew them, it is going to be an added advantage or extra advantage if you knew them. But if you didn't know them, it is still fine. Just come identify the setup. You can only be trading those setups, and you're going to make pips out of the market. So if you don't know how to trade, this is going to be a valid video for you. So now, without all that being said, let's go straight to the charts. So this is a gold chart for our time frame. So I'll start with what we have here. What do you see here? You have a market that has been going up. The overall thing is ranging, but we are focusing on this area here. Where is it? Where is my... We are focusing on this area here, only that one. So what do you see? You have a market that has been going upside, and this is a live market. That means today is Sunday. The market is opening today at midnight, tomorrow at midnight. No, today at midnight. This English stabs. So you have a market that has been going up, and we came here and broke this. It has been making high highs, higher low, high high, higher low, higher high. So we came down and broke. We came down and broke. Sorry guys, it's a kid in the neighborhood making some noise. So we came here and made a drop, base drop, breaking all these previous higher lows. That is somehow confirmation that we are going to the downside, because we removed this demand zone and this demand zone, so creating a supply zone here, which price data reacted to, and price started dropping down, breaking this previous lower low. So those are some indications that we might be coming down here. So what do? We mark this zone here. This is a valid demand zone. It is a drop base rally. Look at the move away, very clean move away. So we expect that if price comes back in this area and we start seeing some kinds of rejections, then we are buying to the upside, or we can just put our buy limits and then we expect price to buy to the upside. So what happens? What would be the ideal scenario here? Good. So we have our buy limits here, and then the stop loss slightly below this previous low, and then take profit. Okay, so we target the previous high, which is this one. However, the first level take profit is going to be around here, which is around 600 pips. The previous high is going to be 1,000 pips for that matter. So this is a 1:3. You risk around $30 or $300 to make $1,000. So that is the first setup. However, when you look at the bigger picture, that is, I think, the daily time frame, you see a drop, a base, another rally here. Very good rally. Look at the move away. 1, 2, 3, 4. So good move away. And then we have liquidity ranging down this area here. You see all that liquidity down here, which is in form of support and resistance. So this would be support. So we would expect at some point price will come and pass through here, sweep all this liquidity, react from this zone and go to the upside. However, the setup we have is this one here. So we expect price to react here and go up. This is a setup that should look out going into the next week. So that is one. Then I'll be showing you some of the setups that have not yet been manifested. The setup that happened the previous week. So now let's come to this area. Here we have a rally, a base, and a rally. So this rally base rally is giving us a demand zone that gave this reaction that pulled up this huge move to the upside. So now what are we looking for? We are looking for a drop, a base, and a rally. That is what we want in this video. So when you look at here, this was a reaction from a rally base rally, so we don't want this one. However, we have a level down here, which is a drop, a base, a rally. This move is also good because it gave extra green candles until we broke the structure here. Not only did we break here, we also broke this one to form another higher high with this move, which originated from there. So what do? We mark this zone clearly like this. You see, mark it clearly from the top to the wick to the bottom. So we expect that when price comes back to that area, we are buying. And also an extra conference we had was liquidity at this area and also this area. So price came, tapped in with a sniper entry, and look at the move away, guys. First level target here, 1:2, 600 pips, and then it went up to 1300 pips. And remember, this is gold, so the pip count is high, 1300 pips. 1:4.9, a very good move away. So if you had seen that trade early, that would be a significant pip count that you would get. Now we have another one here. We have a drop, a base, then a rally. This one did not break structure initially, but it came back and then pulled up to break the structure. And now, how do we enter from this one here? Mark the last candle or the indecision candle from the body up to the wick down. Look at the reaction when price came to that area, guys. Just identify the setup. Look out for the setups only and then trade them. Always target the previous high first. So you look at the move away. First level target 1:2, 700 pips. Then price went up, retraced to around 90 pips, and then shot back up to around 1,400, 1,500 pips, I think. Yes, 1,500 pips. 1:4. Same setup, same pair, gold. So what you do is just look out for the setup. When you see them, take them. No hesitation, no fear. So that is two. Those are two. Where is it? I want to bring it back. I want to leave them there. Good, it is there. Those are two. So now let's go forward. We have another one here. This is a drop, a base, then a rally. This was a very huge rally, guys. Very huge rally. Drop, base, rally. Very huge rally. So you mark the indecision candles in that area that sparked off that move away. Mark them very well. So you wait for price action to come back to this area, and then you buy. And this was even better confirmation. Why? Because there was a rally, a base, a rally here that price did not respect, breaking it, meaning it was coming back. Then it left a lot of liquidity down here, trendline liquidity, this low, this low, this low. So this was a very valid zone. I know in one of those time frames it will look better. So what you do is mark the zone very well, put your stop losses slightly below. I know this is previous price action, but the concept is the same. So target the previous high, which is this one, 1:5, 1,500 pips, and then later it went to 2,000 pips. I don't know how you captured that, but it went to 2,000 pips. So those are three. So we proceed. I'll show you one more because the video is getting long. I'll show you one more, and then I'll call it a day. What you do is you'll have to go to the charts and backtest this yourself. You can also forward test with a demo account, but I would prefer you backtest. There is this one, drop, base, rally, but this one is not a clear one because the break of this structure did not originate from this one. Price had to first range a little bit before it broke structure. However, it is one that I don't think I would take that one. It is not one that I would take. So let's go. I just want to show you one more, and then I end it there. We have this one, drop, base, rally. This is a good move away, though it did not break any structure, but it was a good move away. We have a good reaction. So if you mark this zone clearly from up, we would not, the reaction did not come back, but it was a good zone. So let's proceed. We look for only one, and then I call it a day, drop, base, rally. This one is good. We have a low, a high, a low, a low, and then we got a rally, a drop, a base, and another rally, breaking the previous structures to the upside. So what do? We mark the zone. I know the 4 hours it is rare to identify this setup, to get the setups. However, you'll go to the 1 hour, 15 minutes, and you'll get many of these setups. So put your entries there. stop losses slightly below. Here you see, if you didn't put them slightly below, you'd be stopped out. Don't put your stop loss so tight like this. No, always put it slightly below, allow some wiggle room for price action. And this one gave the best reaction because price tapped in and immediately it started tapped in here and immediately started buying to the previous high, which was a 1:4, 800 pips, and then it continued up to around 2,500 pips. If you're willing to hold, if you're up a swing trader, you'd hold that for long. So guys, I think that is all. That is the video I wanted to show you. That is the setup. The next video is going to be about rally based drop. So subscribe to the channel if you've liked the video. If you've learned something, you can also like the video for the algorithm. And that is all for today, guys. Peace.